Jonathan, how much is the market banking here on a vaccine?
I think that we're overplaying the near-term news. If there was absolutely no news of a vaccine, the stock market would probably be up today the same way that it's been up the last, month or more. And this is really a story of huge amount of liquidity and stimulus coming from the government. And if you look at the overall news flow, I'm not sure that it would by itself warrant the kind of move that we've had right here.
Samantha, are you as skeptical as Jonathan?
I think the volatility right now is tied to a bunch of different things, whether we're going up or we're going down, right? It's vaccine news, it's treatment news, it's Jay Powell speaking. We know that. I still think, though, there's a little bit of a disconnect between the real side of the economy, what's happening with the macro data, right, in particular the labor market, and then what's happening on the financial side, just given that spreads have tightened, which is obviously good. The market is up, which is good, and conditions are loose. So I think we're just monitoring that gap between one and the other to kind of see where things go over the next, couple months.
Yeah, Jonathan, Samantha mentions that gap. Sorry, Sarah. Jonathan, we've got an S&P down, 9% now for the year. When I look at 2021 and what your expected earnings are for corporate America, what kind of a multiple am I backing into? When am I going to be potentially disappointed, or will I not be?
Well, first of all, this year the expectations are for $125 of S&P profits. That's down 25% from last year, and the number is falling further. That basically puts the market multiple at 21. What's so important about that is before we went into this crisis, the market was trading at a multiple of 19 times, and people were complaining or concerned that the market was overvalued at 19 when we have today a market that's much more expensive, and the risks are obviously substantially larger. And if you continue to have the estimates fall, which they are, the market may in fact be really at a 22 or 23. We've never had a recession that we've left with the market leaving at peak multiples. And so, I'm going to disagree with, the other person on the line, but there's always things that are positive and negative in the market on every day, but the reality is that 21 times multiple, given that right now we've had tens of millions of people put out of their jobs and a collapse in corporate profits, and even if these trials go super well, we're not going to inoculate the entire American public probably by the end of this year at the very earliest. And that means that this expectation we have for this bounce in the economy and the ease of reopening is just probably unrealistic. Now, there are a bunch of things to be positive about, but the news flow right now is probably not on the top of that list.
But Jonathan, this is what so many people have argued, and you've missed this entire run-up in stocks. On the flip side, I could argue that, we've never had a recession where multiples are like this. We've never had a recession that was sort of engineered by society and the government for public health and then was let to reopen, with a number of scientific advances on treatments and vaccines, which could all affect the rate of growth, which I'm wondering if the market is more focused on the rate of growth and not just a sudden snapback, and therefore, higher expectations for future activity.
Well, if you take a look, Sarah, at the kind of stocks that are winning, it's the kind of things that you would expect to be winning when conditions are not good. So you're not seeing the banks leading the market. That's what would normally happen if you think that you have a potential robust snapback. You're not seeing in industrial companies and consumer companies and materials companies winning. What you're seeing is that businesses in the tech space that don't depend on the economy are the ones that are doing super well, and non-cyclical companies in areas like consumer staples and in healthcare that don't need the economy as well. And we're not only talking about those that are a play on the coronavirus and cures, but the healthcare suite in general. So if you look at the level of the market, it says like it looks like it's game on. But if you look at the kind of companies that are winning, it's companies that are able to withstand this and are healthy, and not the cyclical companies that should be doing well. If this was healthy, small caps would be beating large caps. If this run was healthy, value would be beating growth, and that's just not what's happening.